The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. Make sure you listen to us anywhere on your mobile phone at TFNN.mobi as well. And you can watch the computers and charts of the traders. 9 hours of live commentary each and every day right here at TFNN on Tiger TV and broadcast inside the e-Signal platform. So let's check out where the markets are at right now and the news for the week and pull that up and do a quick review. Give me 1 second and I'll get it going. Let's see here. Okay. Right over here, looking at, let me pull up the pound. We had the asset purchase. Pardon me, folks. Sneezing a bit this morning. Got some fun allergies going on. But we got the pound dollar, the asset purchase facility votes going on. And just want to get up our full plan. And we'll open up Forex Factor here. Okay. So, on today, being July 10th, we had the official bank rate vote. Said you need to make sure you're very aware of that. It's going to be released out at 7 a.m. And so let's pull it up and look at it. So right there at 7 o'clock, we got... Sorry, got to sneeze again. So right here at 7 a.m., market pretty flat. So, sorry. So market pretty flat right there, and not a lot happening on it. So it was one of the things to be aware of. But glad we didn't try to trade any kind of big move on it because it didn't do anything. Not usually a big surprise. And then let's see. We also had natural gas inventories come on out. Let's go ahead and roll on over and check out natural gas. All right, so right here, natural gas had another perfect setup. This was just like the oil inventory trade yesterday, so I don't know if any of y'all took advantage of it, but I hope you did. We had a spike striker right off of it. Came down. Spike strike, boom, pop, right on back up. And so a nice, easy trade right off of that. Probably the easiest way to trade these inventory reports. You can go back and check those out. But I usually do get a volume spike off of them. And it gives us a nice, quick, easy reversal trade out of the money for a nice profit. So probably something we'll update to look for spike strikes on the future reports. And I'm going to make a note. Spike striker on natural gas and on oil. So the diagnostic sneezing out here. All right. We got so we got the natural gas report. We also tonight be ready for the Aussie dollar. They're going to have home loans come on out. And our plan for that trade, if you don't already have it down, is to enter at 6 o'clock for the 11 o'clock expiration. And the release is going to come out at 9:30 for the Aussie home loans. And we're looking at a $30 minimum profit on the trade. And we're going to be doing an iron condor where we buy the lower spread and sell the upper spread on the trade. And if you don't already have access to Nadex, you definitely want to get it. Hop on over to TFNN.com and click on the Nadex banner on the right side of the page and go ahead and click on Trading Demo Trading Account. Fill in your username, first name, last name, phone number, and email address, and then just click Apply for Demo. And they'll send you an email. You'll be able to log in right away and get access to it, and you can start doing these trades. And they're easy to do each and every day. These spike strikers are easy to do. There's a lot of trades that I teach on here that are very easy to do. The 10-minute deviation level method, very easy trading system to go in and trade each and every day. So there's a lot of systems in here you can take advantage of. And it's options for day traders. It's those who want to trade the futures market, the forex markets, and they want to day trade. They don't want to have to put up like $25,000 or $50,000, like $25,000 plus to day trade stocks. They don't have to have a massive account to have good risk management like you have to have over in futures and forex because the leverage can be so high. They want to have that nice leverage, but they don't want it to cut against them. They want to have defined capped risk. Here's where you can do that, right here over on the North American Derivative Exchange located in Chicago, regulated by the CFTC. And they're covering the Dow, the S&P, the NASDAQ, the Russell. They're covering FTSE, DAX, the Nikkei 225. They're covering gold, copper, silver, oil, natural gas, corn and soybeans, as well as euro dollar, euro pound, euro yen, Aussie dollar, Aussie yen, pound dollar, pound yen, obviously the US yen, the dollar CAD, and the dollar franc. So you got plenty of markets, and you can trade daytime, afternoon, nighttime, early morning Euro sessions. You can trade around the clock. And they got two different kinds of contracts. They have the binaries, which you may or may not be familiar with. You may have heard a lot of things about binaries before. Binaries at Nadex are not the same as overseas binaries. A lot of people they hear binary and they put everything in the same bucket. They don't even know the CME has binaries. Now they're on weather, which is really weird, but they have binaries. The CBOE has binaries on the S&P 500 index, the SPX, and on the VIX. A lot of people didn't know. Wow, the CBOE even has binaries. So there are binaries right here in the U.S. on multiple exchanges. Now there's no volume on the CBOE binaries. The CME binaries are really not made for retail traders. Nadex is an exchange, meaning it's a place where you can come and you can trade. You get the transparency of, orders and pricing, but you have the anonymity of nobody knows who you are. They don't know if you're winning, losing. They don't know if you're getting in, getting out of a trade. The exchange is not trading against you, just like CME is not trading against you. It's other traders, market makers, etc. on the other sides of the trades. So that's one of the big benefits. This is exchange-based, so you get that anonymity and transparency of pricing. It is regulated by the CFTC, so same regulatory body that regulates the CME. It's right here in the U.S., so your money isn't going outside the U.S. You don't have to worry about all those weird privacy concern issues that are happening at the overseas binaries where people have had their information sold off and everything else. They have an actual settlement method. They don't just take the last trade at the last second. Hey, by the way, that's what it is. They take the last 25 trades. Like on futures, they take the last 25 trades. They average the middle 15. They round that off to the nearest, 1/10 of a tick. And that determines whether or not it's in the money or out of the money. It determines what the settlement price is. Makes it very, very difficult to be able to manipulate. It's automatically done, and it's not using the Reuters data feed. So it's an independent, third-party, high standard data feed. And on Forex, they take the last 25 mid prices because Forex, bid ask can fluctuate a lot. So they take the last 25 mid prices, non-sequential quotes. So that way you can't have somebody throw in 25 little bitty trades real quick. So non-sequential quotes. Last 25, the mid, the average of the bid and the ask, and then average the middle 15, and then you get the settlement price. And that's they sort of plot a quasi-indicative settlement price on each market for you, so you can sort of see an idea where that's at. I wouldn't use their charts because it's indicative. The market's based on the underlying. It's not based on the indicatives. So the binary is not going to be priced on where it's going to expire at. The binary is going to be priced on where's the market now, and then the indicative settlement price, that'll determine whether or not it's in the money or out of the money at expiration. But the live price is based on where is the market trading last, so the last trade. And let's see here, some other things for you on how are they different. They have real contracts, so they don't follow the SPX. You would never want to follow a contract that follows an index because the SPX has all these gaps in it. Just to show you an example here, let me open up a XPX chart and log into one of my platforms here. There's a lot of gaps. And so if you had something settling on something that has a bunch of gaps just all throughout the day, because it's 500 stocks, it's moving around, and as the index is constantly recalculated, you want something that's actually traded like the S&P. You don't want the SPX to be your standard settlement instrument. So let me show you one right here. Go into this. We'll break it down to 1 minute. And see all these little gaps that are happening in between the minutes on the S&P 500? So those little gaps could make or break you easily. No way to be predictable. So you would not want that to be a standard for a settlement calculation just on live intraday trading. So a much better method is using something that does trade. Like you can trade options on the SPX. You can trade the spider ETFs. You can trade the S&P 500 E-mini options. You can trade the S&P 500 E-mini futures. But you can't trade the SPX. You can go buy the 500 stocks and make your own SPX, but you can't trade the SPX. You want a tradable instrument, so they base it on tradable instruments. They give you futures and forex. They have 3 market makers right now, so there's plenty of liquidity. A market maker is somebody who has contractually obligated themselves to making a 2-sided market, so that way you can get in or out of a trade either way. And let's see here. Trying to think of anything else with it, but those are some of the main things. You can get in and out of a trade before expiration. You don't have to hold the trade. It's not like a binary on these overseas bucket shops where you buy it. You're saying it's going to expire above, and you literally have to stay in it for the next hour, 2 hours, 24 hours, whatever. 5 days, 5 minutes. No, you can get in, you can get out 1 second later. You get out 5 minutes later. You get in and out of the trade 50 times if you want to within an hour. I don't know if you'd want to do that, but you could just get in and out. You can get in and out. I get in and out of my trades all the time. So many of my trades would lose if I did not exit. And, how many futures do you buy and hold to expiration? Well, not that many. Come on, you get in, you get out of the trade. Binaries work the same way on Nadex. You get in, you get out. Spreads work the same way. You get in, you get out. All right, stay right there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so we're just going over some of the reasons why you want to trade at Nadex and how Nadex binaries are not anything like overseas binaries. The way the price is calculated is simply, it's basically like a vertical. But if you want a really simple example, it's like the delta of a call option. That's it. Same strike, same expiration time, deltas are going to match. Way to show that, to let you see what I mean there, is let me bring up the Nadex platform. And then let's show right over here. We'll look at the binaries on the S&P 500. We'll look at the weeklies that expire at the same time. Okay. And then what I'll do is I'll now go over and I'll pull up an option platform. And I'll pull up the S&P 500. And we'll look at the options that are going to expire tomorrow. Right up here. Let's see, we don't need all those. Pardon me. All right, and then we'll do a little comparison, okay? So let's look at, let's try to find a couple strikes that are similar. Okay, 1975. And price would be pretty close, about, let's see here, 1970, 75.5. So somewhere between these two. It's about $10. Let's see if we can find one that's like right on. I don't know if any of them are going to be right on, but 1975, let's try 1965 or 55. Let's see here, 51. There's a 1950, it's $80. 1951.5's 81.50 on an 81 Delta on the call. Let's see here, 1940. Got a 93, and it's about 93. So on the bid price, 93, the Delta is 93. So I mean, it'll be within a few dollars, but basically, you're trading Delta. It's the Delta change on a call. That's really what a binary is. And when you get that, it's like, oh wow, that's so much simpler. Now you have to understand what Delta is. Delta simply is the rate and change of an options price in relation to a 1-point move in the underlying market. So if I buy a call for $1 on a stock that costs $100, and let's say that call has a 50 Delta, and the stock moves from 100 to 101, and your Delta's 50, that means that $1 option that has a 50 Delta, since the stock made $1 when it moved up, the option will go from $1 to $1.50. Or if the stock moved down from $100 to $99, then the option would go from a value of $1 down to 50 cents. Okay? And a Delta has to finish at either 0 or 100 at expiration, or 0 1.00. So basically at 0 or 1, or 0 100. A binary has to finish at 0 or 100 at expiration. Sounds sort of familiar, right? A Delta can change. As the market goes up and down, the Delta changes. This is what's called gamma. Gamma is how much does the Delta change for a 1-point move in the underlying. So if you had a Delta of 50 on a $100 strike on a stock that was trading at $100, and the market moved up $1 and it had a gamma of 10, then that Delta would go from 50 cents to 60. So now, if the market moved up $1, your option that cost $1 before would now cost $1.50 and have a Delta of 60. So if the market moved up from 101 to 102, then now your option would move up 60 more cents. It'd be worth $2.10. Now, if the market moved down and you went from $100 to $99, and your option was at $1, it would had a Delta of 50. It'll be worth now 50 cents. If you had a gamma of 10, then that would make it now 40, and that would drop your option from 50 cents down to 10 cents on the way down. So gamma is the change in the Delta price. Gamma is the change in the binary price. Works the exact same way. All right, stay right there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. And so went through some of the markets, talking about the deltas and how the deltas work in relation to the binaries. Now, binary basically simply is the delta of a call option, and it moves just like a delta moves, the price itself. You go in and, it's going to be 0 or 100, and there's some advantages with that because, knowing that it's going to be 0 or 100, knowing how it's going to move, you can do out of the money and in the money. It's like you could buy this. Imagine being able to buy, we're in the S&P right now, but this really is the same thing. Imagine going here and buying this at 81, and the market's already above 1950. So as long as it stays above 1950 between now and expiration, that delta will be 100. You'd make $19 on the trade. Okay, or you could go over here and you can find, the opposite side, but basically it'd be like selling this one at, 22. If the market went down, or went up, buy that one at 22, it'd be like buying it out of the money because it's sort of inverted. They have the lower to the higher versus the higher to the lower. By buying that at 21, if the market moved up above it, it'd expire at 100. Okay? So now you don't have to hold it to expiration. You can buy it at 20 when it gets to what is a delta going to be when the market gets to the same price as the strike? The delta is going to be at 50. There's a 50-50 probability that it's going to expire in the money. So you can buy that at 20, you can sell it at 50. That's basically, if you could buy delta on the call options and trade them as they change in price, it's the exact same thing as trading a binary contract itself. So you're basically just trading the delta of the call options. So hopefully that helps you option traders out there have a little bit better understanding, and let you, traders out there that really aren't familiar with them or how they work, helps you understand a little bit more that there's more to them than simply some random, over-under binary trade. Now I'm not saying that's not what it's like overseas, but as far as the actual financial instrument available here in the U.S. that you can trade on Nadex, totally different world. And something that many traders that I know, brand new traders, experienced traders, have really come to enjoy trading as their primary, pardon me, trading vehicle. I was trying to make it through the show here. But the primary trading vehicle. So hopefully you'll give them a chance, check them out, and see if they can help you out. And maybe the binaries aren't for you. I know when I first started out, I didn't even touch the binaries for like 10 months. I actually focused exclusively on the Nadex spreads. And I go, okay, so what is this spread thing about? Basically, it is just like trading a call or put. So you say basically. What do you mean by basically? What is it not like? Well, one is you have expirations every day, sometimes every hour. So imagine getting Friday expiration call or put options where, you get that low premium, you get that high delta, that high gamma, you have a lot less impact of vega, very low theta, you're not paying for a lot of premium, and it's moving fast. Imagine being able to get that every day. Not just Fridays, but every day. Imagine being able to get that several times a day. Imagine being able to get that 1 hour away around the clock. Imagine being able to do that in combination with trading futures or forex. And be able to hedge your trades at a very, very low risk. Maybe on your entry you're hedging it. Or maybe after it's moved a decent amount and you're not quite sure, you're a little nervous, you're at that point where you really want to take profit, or at least you want to set a stop pretty close. But man, you really hate to do that because, every time you set that stupid stop, they're going to go hit it, then it's going to fly 10 more points in your favor, you're going to miss out. And if you close it, it's going to fly in your favor, you miss out. But if you don't close it, sure enough, it's going to fly against you, you're going to give it all back. Well, that's where you bring in and you hedge off. So if it does go back, you only give a small amount. Let's say you're up like $800 on a trade. Maybe you get back 50 or 100 of that. But, you give back maybe you give away $50 or $100 move in your direction. Additional profit. But if it moves like 5 more points, $500, whatever, well, then you can still capture, like, say, 400 of that 500-point move, and you have to close the trade out. So you protected your position. You locked in your profit. You paid a little bit of insurance premium there. And, market takes off, well, you're at your insurance premium, but you still made a nice profit, and you get to potentially make a lot more. It takes a lot of the stress out of trading. And you may just trade the options, or you may trade them to hedge your positions. Maybe you're going into a news position, and you've had on a position for a while. You don't want to close it out, but you don't want to leave it open and be stupid either. So you could put that on. FOMC came out. Maybe you're wanting to hedge a position on. You've been in the trade all day. It's going well. You don't want to close it out. Well, that's where the FOMC can help you out. Today we had some big, nice moves in the market, and as you're taking advantage of those, again, maybe you want to hedge off some positions. You can do that with the Nadex spreads. Speaking of the markets, let's check out where they're at right now. I know we had some big moves first thing in the morning, but we didn't really get to do our lunchtime market wrap yet. We got the S&P is currently down just a few points. We have the Russell is down only 5 right now. NASDAQ is up a couple points, a positive. Dow is currently down 28 points on the day. Looking on over at our metals, we got copper is currently up. What is that? Almost 1%. Gold is up over 1%. Silver is up over 2%. So some massive moves right there in the metals. Definitely the big leaders on the day. Natural gas not wanting to be left behind with the oil or natural gas inventory report, but it's currently down 1% on the day. We got oil is currently up about 36 cents. We got the ags, corn, and soybeans. Corn is up 1.5%. Soybeans is up 0.8%, so some nice moves there. Pretty quiet over in most of our currencies. We got the pound dollar is down 26 pips. The euro dollar is down 36. Make that 38 pips. We got the euro pound is down 60. Dollar CAD is up only 4. Dollar Frank's up 20 pips on the day. We got the dollar yen down 27. The pound yen down 77 pips. You got the euro yen is down 84 pips. And the Aussie yen is down 53 pips on the day. All right, so that catches us up on those real quick. Let's go through and do a quick review on deviation levels and see where the markets are currently located. We got natural gas up. Might as well start right there. We did get a nice little move. Got a deviation high to low. Let me drop a couple of these things off so we can make our chart a little bigger. And so anyways, but we got a deviation high to low. We did hit that deviation high to low. We moved up about 0.3, but we moved down to 0.7 or so, and especially on that news reports where we got all the big move, and but it's sitting basically oscillating right around a 1 deviation high to low move at the moment. Probably pretty done for the day. And we actually got a short a little bit ago, sort of missed that one there, but we got a 5 and 10 minute short dropped on down. It's actually back at the same price right now. That might even be a trade worth looking at. So let me see what we got, see if there's anything left on the table with that one, and maybe we can take advantage of it. Would have been a lot better to take advantage of it 13.20, but who knows? So it's pretty quiet out there, and we might be able to go in and grab it in the money trade. It depends on how much implied volatility is left in it. If there's anything of value, then we'll grab it and trade it. Okay, so what I'm going to do here is open up the box spread analyzer. You can open that up over on TFNN.com. Just look on the right side and get free access to check that out and see how it works. And you pull up binaries, you pull up spreads, you get the daily deviation levels, which are amazingly accurate. But not just the deviation level themselves, but look at the 1 deviation, because like I said, you look at that high to low. We didn't hit a -1 deviation level. We hit a -1 deviation high to low on the day. And but it's just really sitting there flat, oscillating. Got a 5 and 10 minute spike on it. And so if I go in, pull them all on up, and let's look at what we got going on right here on natural gas. So I'll select that one. I'm going to drop off the yen, and I'm going to drop off small caps on natural gas. Nothing happening on the 2 o'clock. We're just way too late to get in there, but definitely would have been a nice profitable trade if we could have grabbed it. Really just not a whole lot happening, period. So looking at what we got on the list here, sort of surprised on that one. We can even get that one for $61, considering it's a 41.20. Oh, we're at 41.27. That makes sense. Okay. So no trade at the moment. Just no premium. It's really already all been sucked out. But we did have one right there at the top of the hour on that volume spike that looks like it's going to work out well for both the 5 and the 10 minute time frame. All right, so that's natural gas. Let's hop on over. Let's check out. Might as well check out oil while we're on the energies and see how things look over here. Pull that on up, and it looks like oil's moving on up. It hit. How did we get that one? We got to 0.983 right there. Oh, 1.07. There we go. We hit the deviation from low to high. So again, that low to high is very, very, very important. And so it'd be beautiful to get a volume spike right now. It doesn't look like we're going to get one, but it looks like a very nice setup potentially on that 1 deviation level to do a turnaround. Just broke out of the expected range. Had some nice volume, man. A lot of volume really at the end of the day for oil. I would sort of expect that to be a bit of a sell-off, like take profit, popped up, and back it on back down. So just do a little bit of a play. Let's see if we got anything there that we can use. I'm just trying to see if we got any plays that we can take advantage of here. All right, so looking at oil contracts. And where we're at on crude oil, 102.46 here in the next 15 minutes, realistic or not, is the question, right? So, I'd involve it pulling back here. That's potential. Okay, but that's still only 14 minutes. What do we got a little bit further down? 102.50. That gives us till 230 for 25. That'd be pulling down, what, 16 ticks? So, which is not much of a move at all for we'll have to pull off right there. So that'd sort of be the two choices if you want to go in and do a short on that. And check financial juice to see if anything's flying across the wire on oil that I'm missing out on. Right here. Go on in. There we go. And see what comes on up. But 102.50 actually doesn't look that bad at all. I mean, for the risk and for the proximity and considering how we just broke up through the expectation, it's not below deviation level. So I'd probably look at selling the 102.50 right now for approximately $75. And then buying back half of that. So we're flying around quite a bit on it. Let's go in. Let's grab those. Let's put an order to take profit on half. And let's see here. So I want to look at 109.29. Potentially as a move back down. That's within our expected move. See the expected move right there. So let me go in, and this is a good use of the simulator. What would happen on this oil contract if we could get back down to that price? So I'll hit 102 point, and let's just we'll put 29. That's right where the deviation level is. What would we expect the buyback on that to be? This is going to be as low as $28. And what did we risk on the trade? We got in here at a sell price of 73, so that's a 26.50 risk. So I'll go up and I'll pull up a calculator real quick. Just basically say, okay, what's 73.50 minus 26.50? Okay, that puts me down at 47. Be a 1-to-1. This is saying it should actually get all the way down to 29. So if it hit that price. So we put in a 47 is definitely a conservative way to place my take profit. So I'm going to go in. I'm going to change that to 5 of those. And I'm going to put that at 47 right there. Okay. Hit place order. And we'll talk about the other half when we get back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're back here to the Diagnostic Trading Hour. All right, so we're checking out oil right now. We got a 230 contract on. Looking at oil moving on down. And we sold the 102.50 contracts. And we have a take profit on half our position at 47. And that's basically what would happen if it just went a little past 102.50. So we're talking about, 15 ticks below where we're at right now. That's nothing for a move on oil. And then I got my second take profit. I went down and basically put that settlement price down there. We'll look at it. But basically I got my second take profit on the position down at 27 currently, $28, and I'll be watching the simulator as I got that price of 102.29 in there as a potential take profit. So I may adjust that, right now. I mean, it's at 28.50. May adjust it around a little bit, but that's where I'm taking out the second half of the position. And so like right now it's at, say $30. So if I wanted to adjust it, it's real simple. I just go up and click on it. And right there. Open it up, and right now I got it at 27. I can change it to say like $30, and then just bid that order. There we go. So pretty simple, pretty easy. I'm looking at a potential hedge just in case I see the market going back up. We have a magnet price sitting right above us at 102.80. Market just came right up to that magnet, fell off of it, was not able to break through with any kind of strong volume. If the market's not able to push down, I would not be surprised to see it pop on back up to 102.80 here. It's going to be stuck somewhere between 102.29 and 102.80, between 230. And so I don't really expect it to go any lower than that. And that's why even on the 102.50, I mean, we're still taking that profit. We're not waiting because it may come down to the settlement and bounce off of it. But anyways, keep an eye on that. I'm looking at the 103 potentially as a hedge. And if I got into that trade, again, I put in the take profit price of what? That magnet level, 102.80. And that tells me that the contract will be worth approximately $30 for about a $25 profit on a $5 risk, 500% return. Again, not a trade I'm looking at just yet, but if I see hesitation on that down move, pardon me again, and I think it may move on back up, then I'm going to look to take a, grab that contract for probably somewhere around $5 and get out for somewhere around $25 on the trade. But right now, market is moving in our favor, and hopefully we'll get a few more ticks, and don't need too many more, and we'll be able to grab our profit. All right, so anyways, but sold at 73.50, buy back at 47, buy the other half back at 30. That 47 will cover all the risk on the other half of the position. All right, so, and again, a reminder for you, the 103 is the hedge trade in case it decides to pop on back up to 102.80, that magnet price, before it's all out. All right. I may go ahead and put that on because it is hesitating. We're not getting increasing volume to the downside or the upside at the moment. So we're just getting, the volume is declining at the end of the day. What that tells me is I expect there to be something. In the last 30 minutes, oil gets a little bit crazy. And so there's been all this movement. There was obviously a lot of take profit up there at the top. That's why we have all that volume going on. But there's going to be a lot of traders looking to clear out of their positions before the pit closes to, not have that increased margin and take some stands on some different positions. So, but there's a lot of volume up there. You got your breakout traders going, it's not going to break out. You get your fallback traders. So, we're expecting that move either down to 102.29 or up to 102.80 by the end of the hour, at least to 102.50. And as long as we get 102.50
big things in technology
or 102.80, we should be good.
$10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insight